Hey guys, and welcome to the Working Money Channel. I've got the euro to US dollar chart up here, just showing you. Take a look at this, guys. The euro is taking a beating against the US greenback. Right now, it's at about 1.019, almost at par. If you take a look at the chart, you guys can see over here, I have it on the weekly. So here's where it is right now. You can see the dotted red line falling to what is looking like a 20-year resistance level. We have not seen a US dollar at par with the euro for about 20 years, almost exactly 20 years. As you guys can see, the last time that happened was July of 2002. So we are in an interesting place right now globally and financially. Just taking a look at Bitcoin here. Also on the weekly, we're still hovering at that $20,000 mark, that $20,000 level, hitting support from back in late 2017, early 2018, so we still haven't broken that support for Bitcoin. It's also looking like XRP is still holding on to that 32 cent level in and around here, so also finding support among former resistance that we saw back in mid-2020. So we're holding support. We haven't seen too much movement in the crypto space, and so we're in a bit of a wait-and-see scenario. I mean, the news still isn't looking good in the crypto space. Like crypto lender Voyager Digital, they just filed for bankruptcy after Three Arrows Capital fails to pay back their $650 million loan. So guys, this is a classic example of that snowball effect. Three Arrows Capital was one of the first ones to fail, and now this is having an effect on the rest of the crypto space. This is likely why we've got guys like Sam Bankman-Fried and Changpeng Zhao from Binance looking to swoop in to help save these companies because, and I didn't think of this at that time, but it could be that these companies owe money to other companies that could affect those particular exchanges. So in this case, crypto lender Voyager Digital filed for bankruptcy on Tuesday, which was just yesterday, becoming the second high-profile crypto firm to do so in recent days. The Toronto-based Voyager filed for Chapter 11 bankruptcy protections Tuesday in the Southern District of New York, estimating that it had more than 100,000 creditors and somewhere between $1 and $10 billion in assets. It also recorded the same range for its liabilities. So guys, this is just one of the latest ones that we are seeing. Voyager joins Three Arrows Capital in filing for bankruptcy. Three Arrows, however, filed a Chapter 15 petition tied to an ongoing litigation effort ordered by a court in the British Virgin Islands. According to writer Francis Coppola, not Francis Ford Coppola, Voyager's loan book accounted for nearly half of its total assets, and nearly 60% of that loan book was composed of loans to Three Arrows Capital. So you guys can see how these companies had been working together in the crypto bull run, and now, a bit of a domino effect taking place, affecting a lot of the big players. This also kind of falls in line with that prediction that Brad Garlinghouse made a while back when he said, we're going to see a lot of consolidation in this space, and it wasn't necessarily, I guess he wasn't predicting that it would be for good reasons, or should I clarify, in a positive market scenario. The bear market is definitely affecting a lot of these companies, and, we're seeing a lot of them fall to the wayside, and, the bigger guys are swooping in, all while Bitcoin is depressed. If I bring up the total market here, let's just throw up a price range tool just to see where we're at right now. So, the entire crypto market down about 70%. We're still waiting. I mean, it could go down even lower, even if it's at 80. That would reach the former high that we saw back in late 2017 for the entire crypto market. So another leg down, guys, still very possible. Again, if I bring up Bitcoin one more time, we can see Bitcoin in the same boat roughly, although it is already touching that former all-time high that was set back in late December 2017. So, an 85% correction would bring it back to this level here. This would be 80%. 85% would bring us down and around here. So just to kind of give you guys a sense, that would be 85%, and 80% would bring us in and around here, so kind of just at the top of that range, which, falls, directly in line with this zone, this resistance level or supply zone that we saw back in mid-2019. So, I wouldn't be surprised if Bitcoin did drop another 10, 15%. We're getting a bit of a reprieve right now, and, I'm feeling like, there are a lot of indications that the bottom is almost here. Nexo starts process to potentially acquire troubled crypto lender Vault. So Vault was another one that defaulted, and now crypto lender Nexo has started the process to potentially acquire their rival, Vault, after the latter abruptly halted customer withdrawals on Monday. Sharing the news exclusively with the block on Tuesday, Nexo said it had signed an indicative term sheet with Vault with a plan to acquire up to 100% of the Singapore-based company. The term sheet grants London-based Nexo a 60-day exclusive exploratory period in which it will conduct due diligence. And here's a quote: "We have to see what exactly is on their books, and it's going to take a little while," Nexo co-founder Antony Trenchev told the block in an interview. "But since we have the exclusive exploratory period, we are the only ones looking at them right now." So it's kind of like an exclusive offer to purchase this troubled company. So Nexo looking to acquire. Again, this one brought to us by XRP Crypto Wolf, so I got to thank him for that. But just wanted to reiterate that point that Brad Garlinghouse made. This is when we're going to see those acquisitions. This is when we're going to see these more stable, financially stable companies buy up the companies or acquire the companies that have been defaulting, haven't managed their money properly. We're also seeing Ripple partner Bank of America. They have seen an enormous decline in their crypto users. So here are some statistics from them. Bank of America has recorded more than a 50% drop in usage, according to data published in its most recent report. So they just did a report. They saw a 50% decline. The Charlotte, North Carolina-based banking institution says that the number of customers with cryptocurrency exposure declined to less than 500,000 people back in May. In November, for comparison, it topped out at more than 1 million active crypto users. So we can see, the interest in cryptocurrency is slowing down. And that is very, very different than the fear and greed index. I mean, I think there were more people in cryptocurrency, whether it was last month or 6 weeks ago, when the fear and greed index was lower than there are now. I think people are realizing this is going to take a while to rebound. And I mean, by a while, I put that in quotations because I feel like we're through the bulk of it. Being through a bear market already myself, the first one really felt like it took a real long time. And I feel like it was because it was at a point when I had first gotten into crypto only a few months prior. So, it felt like that was very extreme, emotionally. But, guys, when we take a look at the chart, we have topped out back in November. It's already been, how many days has it been so far since the top? It's already been 238 days. And how long did it take us to bottom from over here? It took us roughly 364 days, so about a year before we actually saw the bottom hit. And so that's just eyeballing at the bear market from 4 years ago. Even if we bring ourselves close to that point, 350 days would bring us to roughly October 24th. And if you guys remember the video I did a few days ago, I did mention that Marin tweet where she predicted back in January of 2022 that we were going to see a decline in May for Bitcoin. She actually wrote May the 10th, and that the uptick was going to start to occur, at least this is how we were interpreting the tweet, the uptick was going to occur on October the 28th. So if we just put things into perspective here, May the 10th was this candlestick here. And again, let me remind you that she predicted this all the way back here. January the 22nd was the prediction date. This was the prediction date that the market would turn down here, and then sure enough, we did see a big move to the downside. It did move down further, however, and then by October the 28th, which would bring us in and around here, guys, we are to expect a turn to the upside. At least that is what that Marin prediction states. And if you guys didn't catch that video I did a couple of days ago, I will link it up here in the top right-hand corner. So guys, fear's still fairly low. The market is still fairly depressed, but the companies that are surviving, that are still thriving, like Ripple and many other ones, they are still proving their worth based on some of these types of deals that they're inking. Like, for example, like Lita Bank, they have just inked a deal with FSS Technologies, and FSS is a Ripple partner, Cambodia's largest commercial bank. This one brought to us by Mike Manfield here on Twitter. Cambodia's largest commercial bank, Lita Bank, has partnered with FSS Technologies Singapore in a multi-product deal to provide a comprehensive merchant management system. The deal will consolidate and digitally transform its nationwide merchant options and automate its terminal monitoring, reconciliation, and settlement processes. This deal will follow FSS Solutions with the help of Lita to bring its merchant operations under one interface, leading to gains in turnaround times and cost rationalizations. FSS's multi-product solution is comprised of FSS Merchant, FSS ADM, Active Device Monitoring, and FSS Smart Recon. Additionally, the company will provide Lita with real real-time insights into the multi-estate POS network. So we're seeing an integration here, this company, or rather this bank from Cambodia, merging with FSS, a Singapore company. Aklida Bank has a base of over 150,000 merchants and an increasing number of POS terminals. And so prior to the agreement, the bank was already handling one of the largest merchant portfolios in the country. So they're looking to streamline. It was imperative for us to first streamline and consolidate our merchant management systems before we could focus on the next phase of growth in our business. And Aklida was looking for a reliable technology provider who could not only provide a comprehensive solution, but could also handle the scale and help us optimize our current operations. And so, boom, enter FSS, a Ripple-enabled company, aiding Aklida Bank, in this case, for some multi-product services, payments for merchants, etc., all running on RippleNet. So I wanted to thank Mike Manfield for pointing that out. Also, guys, some new updates, some new information with regards to the XRP ledger's ability to support the XLS-20 standard for non-fungible tokens. This brought to us by Michael at Val5Links on Twitter. According to an update posted by RippleX, the development arm of Ripple, their team of developers is now confident in the XRP ledger's ability to support the XLS-20 standard for non-fungible tokens. So, non-fungible tokens has been one of those things that, David Schwartz has said will be more prominent in the future with future development. And, we are assuming in the metaverse, Brad Garlinghouse has said the same. Today we are seeing NFTs as, works of art, people throwing tons of money at them. And then these pieces of art declining 80-85% in value because cryptocurrency has declined in value. So, NFTs are kind of a laughing stock right now for the masses. However, real applications for NFTs are really going to get kickstarted, I think, within the next few years. As reported by you today, Ripple upgraded its service in order to let validators vote in favor of implementing the aforementioned standard. The developer team started testing whether or not the XRPL would be able to support the additional transaction load brought by on-ledger NFTs. The RippleX team was able to research the peak sustained throughput of 2,199 transactions per second with XRP payments, and so the developer team also tested NFT throughput by creating 1 million accounts that minted 20 NFTs each. After that, RippleX also measured a mixture of XRP payments and NFT offers as well as NFT minting. I mean, I've got to say, I'm not a developer or anything, but I'm assuming that NFT minting at this point in time has gone down quite a bit considering the flurry of activity, the FOMO, the hype has died down a lot. So being a developer, I guess I would feel I would rather work under the conditions of a bear market rather than, working under the stress and the actual throughput of these ledgers at high volume, but I guess you have to stress test them anyway. So, I mean, it's probably a lot less stressful to work through a bear market. However, you do need to know if the ledger will be able to handle certain processes. So in this case, minting 20 NFTs each, measuring the throughput and testing the native NFT functionality, because although the NFT craze has lost popularity and lost the hype factor today, let's not forget, guys, we're down at 18 on the Fear and Greed Index. This is all correlated. Although that is the case, this is likely not going to be the case moving forward, and NFTs, I think, will ramp up again. Which brings me to this next point here. John Deaton tweeting this out with regards to a Squawk Box interview with Jim Cramer. I'm sorry, Jim Cramer, he writes, but I have to agree that your comment is the most bullish sign that crypto has had in weeks. Literally do the opposite of what they say. Here is the Squawk Box interview. I'm taking it at the 54-second mark, guys. I will link this in the description if you guys are interested to watch the full thing. But here's Jim Cramer on Squawk Box. Here's what he had to say about crypto.
So, I mean, look, right now it looks like that everything's bad. And I'm not going to deny that every asset class is getting hurt. The one I'm most interested in is crypto. Because a lot of people are in crypto, and crypto really does seem to be imploding. But it goes from $3 trillion to $1 trillion. Why should it stop at $1 trillion? There's no real value there. NFTs. I mean, you look at these companies. There's these companies that you never heard of, and they blew up over the weekend. And you just say to yourself, holy cow, there's $600 million just going down the drain. And we had Gary Gensler, the chairman, on a few weeks ago, and he just said, look, anybody who has a come-hither rate of investment, in other words, the rate that you earn, you can kind of forget about them. And that's what's happening.
All right,
how many
Jim.
places can Sam Bankman-Fried save? Melissa, how many can he save?
We had 13.9 was what Katie Stockton's next Bitcoin support level, 13.9.
What an awful ass. NFTs sold to you.
Whoa! Considering Jim Cramer was literally stating the opposite, apparently only several weeks ago. So he said a few things here. NFTs, what an awful asset. NFTs sold to you. Why would crypto stop at $1 trillion? There's no real value there. Also, there was also that Anthony Pompliano podcast as Bitcoin was kind of hurtling up to new all-time highs. Pomp had Cramer on, and they were really kind of giddy about Bitcoin and, everything that it could be. So again, do as they do, not as they say. Be greedy when those are fearful, and fearful when those are greedy. Of course, that inverse relationship. So John Dean down here saying, Jim, do you still own Ethereum? Several weeks ago, you said it had a 40% upside. I am Legion also down here, bringing up the point that I just mentioned. Jim Cramer says every company should have Bitcoin on their balance sheet. And that was an article that was written in February of 2021. In an interview with CNBC's Squawk Box, so the exact same news outlet, Jim Cramer shared advice on why businesses should purchase Bitcoin as a reserve asset rather than holding onto fiat currency. So again, sounds as though, as John Deaton points out, one of the most bullish crypto signs we've seen in weeks. Digital Perspectives here also agreeing on that point. Adam Kilpatrick saying, Jim Cramer, the ultimate example of talking your books. Literally listen to him, then look what big money is buying into. I'm betting the two are at polar opposites. TC.XRP saying down here, if you want to make money investing, just do the complete opposite of what the clown Jim Cramer says, and I could not have said it better than that. Also, we've got an actual Twitter handle here, Inverse Cramer ETF, not Jim Cramer, at Cramer Tracker. Jim, when Ethereum was at $3,000, I love it. It is fantastic. Jim, when Ethereum is at $1,000, there is no value in it. So is this another indication, guys, another kind of unofficial indication that the market could be at an inflection point where we could see an ultimate reversal? Now, I'm not saying this is going to happen right away. I'm saying the bottom could be close. Whether it's at 70, 80, or 85%, we are getting relatively close. At the end of the Cramer clip, we did hear the host say that the next target is around 13.9, which would actually bring us at an 80% correction in and around here. So, it's not to say that the market won't go down further or could not go down further. But these are the best opportunities to buy, guys. And one more thing, you notice how he kind of sprinkled in a little bit of fact with the FUD? And he was saying there are all these companies going to zero. There are companies like Voyager Digital filing for bankruptcy. Of course, there's Vault and Celsius and many other cryptocurrency companies. So he's not wrong, but he fails to acknowledge that the true value lies in the companies that are continuing to build, like Ripple and the XLH-20 standard, just as one example. So should we be doing the opposite of what they're saying? I certainly think so, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.